Distinguished visiting fellow Steve Moore and Veracruz Capital founder Steve Cortez. Good to see you guys. Thank you so much for joining us. Steve Moore, kick us off here. Your observations of the jobs report.
Well, it's not 140,000 because you got to subtract out the losses for the revisions downwards. So it's like 90,000. It's a horrible report. The other thing that hasn't been mentioned yet, I'm just looking at this as reading furiously as we've been talking. But the two other bad signals. One was the average work week, Maria, fell. So people worked less hours, not more. The second one that was kind of disappointing, real disappointing, is that no wage growth. In fact, wages fell a little bit, very slightly, but that was after 3 months of wage gains. So we were hoping to see, Maria, kind of tightness of the labor force that would allow workers to get higher wages. That doesn't appear to be happening right now.
Wow.
Look, 90,000 jobs. We need 150 to 200,000 just to keep pace with the labor force participation. One last thing, Maria. The unemployment rate in the United States is not 5.1%. That's the biggest lie statistic out there.
What is
we
it?
We are closer to the U6 number, which is 10%, because so many people are dropping out of the workforce.
I think everybody on the panel here would agree with that. But I think it's really interesting that you mentioned the average work week is lower. Bill,
Yep.
I think we interrupted you earlier. Did you want to say something about fiscal policy? What is the Obama administration going to say about this?
Well, why is it that they're not hiring? Because workers aren't productive. And why are workers not productive? They don't have the infrastructure. They don't have all of the things that are needed to get workers to be productive. We are not paying workers enough. Why? Because they're not productive. All of it comes back to productivity. And that's the key, is where fiscal policy can be doing something, but they're not. Fiscal policy is frozen because of political impasse. And we've always talked about a trifecta of fiscal problems: high structural deficit, high debt to GDP ratios, but a broken political process. But the system can take any 2 out of 3, but when we have all 3, we're dead.
Yeah,
and we're dead as far as the eye can see. And now we have a looming issue with the debt crisis and the debt ceiling, and also the December debt ceiling. Is government really going to start having a shutdown problem, or even worse, a debt ceiling problem where we get downgraded yet again because we can't pay our debts?
No,
that's the problem.
The political solution, last I checked, the two front runners, their solution to this is to spend more. Trump and Sanders want to spend more, 18 trillion more. Slap that on top of your debt, debt ratio.
But the case is very good for spending more, because we do have infrastructure that needs spending on. We don't need spending on a lot of things that we don't need spending on, and everyone kind of knows what those are. And so we need to shift the composition of spending.
Let me bring in Steve Cortez, because like Keith McCullough, Steve Cortez has also been predicting a bit of a gloom and doom when it comes to the broader economic story. Steve, how do you see it?
Right, and I don't necessarily want to celebrate that, but by the way, if this is a recovery, I hate to see the next recession, because this recovery is very tepid at best. And look, September was a great song by Earth, Wind, and Fire. It was a terrible month for markets, terrible month for the economy. Here's what's most worrisome, I think, is not just the U.S. in isolation, but, and I've said this before on the show, the U.S. in terms of global growth, because the rest of the globe is in such deceleration mode. The U.S. has been like Atlas holding up global growth. Well, Atlas is clearly shrugging right now, and that is going to be a major problem. Investors need to be defensive here. I think the 10-year yield is headed well below 2% and will stay there.
It's already below 2%. You could think it goes much lower than this, huh?
And yes, much lower, and will stay there. And I think in terms of stocks, you need to err to the defensive side. Staples, utilities, the kinds of things that can handle a low-growth environment.
Let me just add to that.
Go ahead, Bill.
Not only is the U.S. the only source of growth in the world and is tepid at that at 2%, but every policy in the world is trying to steal growth from the U.S. because they're trying to depreciate the exchange rate. Depreciating the exchange rate doesn't make growth.
No,
it takes it from someone else.
And
where's it going to take it from? The U.S.
Yeah, the U.S.
Steve, on that point, when I've tried to characterize this as this central planning panic. When they're trying to tell you that we're going to get growth and they don't get growth and they keep printing, to Bill's point, and all they do is perpetuate deflation instead of growth. Are you seeing the probability here rising of an all-time low in the 10-year bond yield?
Yeah, Keith, I think absolutely. I think your point is spot on. Markets are starting to really lose faith in central planning, whether it's central planning of trying to steer industrial policy in Beijing, or whether in Washington, D.C., it's easy monetary policy. I think markets are starting to reach the limits of patience with central government planning. We need real underlying growth now. And by the way, the only way I see that happening, and there's been a lot of doom and gloom so far on this panel, I'll give you perhaps the good news, the potential good news.
I got some good news at the end of the show also.
Okay, I do
Just
believe
saying.
a Republican is going to win in 2016. I think if we ease up on taxes and even more importantly on regulation, American innovation is far from dead. We can come back, but we need to get the government hurdles out of the way from entrepreneurial capitalism in America.
Which is why Steve Moore, all the GOP candidates right now are trying to talk that story up. Lower regulation, lower taxes.
Yeah, look, as I look at the U.S. economy right now, I think there's way too much attention paid to monetary policy. Look, we have low inflation, low interest rates. That's a good thing. The real thing that's holding back the American economy right now is horrible fiscal policy. And by the way, I disagree. Look, if we have to have a fight to keep these budget caps, I mean, read my piece in the Wall Street Journal today. It's worth the fight. We can't allow continued slippage in terms of these caps where Congress wants to spend $100 billion over the caps. That's
but
worth
is it
having
worth
a fight
the fight to shut the government down, Steve?
Well, if we can't continue to borrow $1 trillion a year. It is worth a fight. I think it is worth a fight to hold to those caps.
I do. I think we've had 18 government shutdowns. We've had unlimited amount, 33 continuing resolutions, and. I think the big problem, guys, is that sometimes you got to have a landing, and it's got to be hard. Yeah. And all of this stuff has been done to mask a hard or prevent a hard landing.
You're right.
It just gets worse.
Isn't that the point?
Why are we so afraid of the hard landing?
Everyone on Wall Street doesn't get paid when that happens unless they're in cash, long bonds. And by the way, buy some gold right here, too. But the reality is that people can't handle the truth on that front. And coming out of the same...
Especially someone who's trying to buy a vote.
People came out of 1979, out of Jimmy Carter, same kind of bipolar setup where both Republicans and Democrats were really like big money printers and spenders. And then all of a sudden, Reagan said, you know what, Volcker and I are just going to take you guys out, take the pain. 1981 recession, and then everything was good after that.
It was a tough period, and then it was a glorious long-term period after that. But you had to take your medicine.
But what's the tough period now of trying to get growth up? How do you get growth up without something?
You get out of the way. You get out of the way. The government is not the answer.
Absolutely.
Get out of the way.
The government's been in the way so long, people don't know where to go.
Yeah. Well, yes, and that's the key point, I think, and we're seeing that through labor participation, right? It's the lowest level since 1977. People have given up. The size of our workforce is shrinking. Now, that's where I talk about there's some disconnects here. We're saying we have all these job openings. We need employers, corporations out there to innovate and to hire and to add to their workforce. We need to get the word out there also that there are jobs out there and there's lots of opportunity and people need to start participating in the workforce again.
They're not going to do that today. By the way, unfortunately, people are going to watch the market and they're going to say, oh my God. And this is really, you actually and perversely need a crisis to perpetuate some kind of political change.
You want an amazing statistic. 350,000 more people dropped out of the workforce, Maria. I mean, this is continued
decline. So the participation rate is what? What is the participation rate right now?
It's right, 62.4%.
Wow, even worse. Yeah, it keeps on dropping.